Today, a new white knight steps in with a potential plan to save FTX users. Mike Novogratz of Galaxy Digital says he stands to lose millions of dollars in the exchange's collapse. And Callie Cox of eToro breaks down the market aftershocks. Welcome to CNBC's Crypto World. I'm Tanea McKeel. The crypto market is climbing back up after yesterday's huge sell-off. By noon Eastern, Bitcoin jumped back above $17,000 after hitting a new bear market low last night of around $15,500. Ether rallied to around $1,300 and Solana rose 30% to $18 after tanking 70% earlier this week. Prices are spiking thanks to hope that another crypto businessman could step in to save FTX from total collapse, but we'll talk more about that in a moment. Investors who are watching the U.S. economy also got some good news. New data released this morning shows that inflation may be peaking. That news gave a boost to Wall Street as well. Okay, let's catch you up on the latest news surrounding FTX. First, hours after Binance pulled the plug on the potential deal to acquire FTX, Justin Sun, the founder of the cryptocurrency Tron, tweeted that he was, quote, putting together a solution to initiate a pathway forward. Sun did not offer up details of the potential arrangement, but said that his team was working around the clock to avert further deterioration and to find a return to normalcy for FTX users. Sun added that he was confident the situation was, quote, manageable, following the holistic approach that he was assembling with his partners. The CNBC previously reported the Chinese-born businessman has been involved in several controversies in the past, accused of copying other technologies, including the Ethereum blockchain and the collapsed algorithmic stablecoin Terra USD for his own endeavors. In an email to CNBC, FTX said that what has been shared via Twitter are the only official statements the company will be issuing at this time. Sun did not immediately respond to CNBC's request for comment. Next, Sam Bankman-Fried tweeted a public apology this morning. In a thread spanning more than 20 tweets, the FTX founder admitted he messed up and blamed himself for the collapse of his crypto exchange. SBF, who over the summer was considered crypto's savior, is now begging for billions of dollars to stave off bankruptcy. Earlier this year, his exchange was valued at $32 billion. The former crypto billionaire admitted that he should have been communicating more very recently. He wrote that, quote, transparently, my hands were tied during the duration of the possible Binance deal. I wasn't particularly allowed to say much publicly, but of course it's on me that we ended up there in the first place. The CEO also announced this morning that he is winding down Alameda Research, the trading firm he co-founded alongside FTX. SBF says his number one priority is, quote, doing right by users, adding that he and his team are spending the week doing everything they can to raise liquidity. About a day before the collapse of SBF's crypto exchange, the CEO took to Twitter to assure his customers that FTX had enough assets to cover their holdings. Those tweets have since been deleted. In the meantime, following criticism that FTX was allowing onboarding amid liquidity troubles, the crypto exchange has suspended new users from signing up. A message on the FTX website today says, quote, all onboarding of new clients has been suspended until further notice. And this morning, the website also said FTX was unable to process withdrawals. Finally, Galaxy Digital CEO Mike Novogratz told Squawk Box this morning that he is, quote, not optimistic that his crypto-focused financial services firm will be able to recover the entire $77 million exposure tied to FTX. This comes one day after Galaxy Digital revealed the exposure in the company's third quarter earnings report. Novogratz called the FTX fallout a, quote, body blow to trust and says he's furious. He compared the situation to the Theranos controversy.
This is just so frustrating in that you've got thousands and thousands of people working their tail off to build these new ecosystems. And, you know, this is a tale as old as time to some degree. Some young, charismatic guy in Bermuda shorts with the floppy hair charmed the 20 best investors in the world, as equity investors in his fund, charmed regulators, and was kind of the front man of the whole system.
Novogratz also told Squawk Box that he believes Justin Sun is probably the one guy in the crypto ecosystem wealthy enough with enough liquidity to potentially step in. All right, on to our main story. In light of the deal between Binance and FTX falling apart, I spoke with Callie Cox of eToro about what the development means for markets and the industry as a whole. She also weighs in on how the latest economic data is shaping markets. Given all the swings that we've seen in the crypto markets in the past 24 hours, such a change from the weeks and weeks where we had such low volatility. So what do you make of this return to volatility, and where do we go from here?
Well, we're obviously in a very quickly changing macro environment, and crypto is staring down some big changes in the industry as well. I mean, we're processing a lot of news on the industry concentration front, and people are just really trying to figure out where the center of gravity is for, Bitcoin and other established cryptos right now.
Looking back on what we know already, obviously this is unfolding in real time before our very eyes, but are there any red flags that investors overlooked ahead of whatever this is? We don't know if it's going to be a collapse, but just sort of this very sudden downfall of FTX and of its leader. What did we miss?
Well, look, when it comes to money, you're going to have human behavior and risk issues no matter which market you're in. And crypto is a young and maturing market that's going through a very volatile period of persistently high rates. The Fed hasn't indicated that they're going to back off anytime soon either. So when you have that, when you have so much change, when you have a young industry with lots of businesses, trying to figure out all the rapid changes, you're going to have, some of these slip ups here and there. I'm not sure that there were any red flags in our mind. I mean, eToro wasn't exposed to FTT or FTX, at least on the US side. And, we take customer safety very seriously on our end. So I think it's more a case of, a young industry kind of stumbling along and figuring it out. The technology is still compelling, but you obviously have the technology and then you have the coins, sort of reflecting that concept, but, also reflecting a lot of speculation and macro catalysts as well.
Obviously, faith has been shaken, just as investors seem to be moving past the struggles from over the summer and dealing with the fallout of the previous event with Terra and Luna that spilled into Three Arrows Capital, et cetera, et cetera. How long do you expect the aftershocks of this news to go on and sort of permeate throughout the market?
Well, the news that we've heard over the past few days is such a big shift in the industry, and we're going to be digesting it for some time. I think it's significant too to point out, though, that crypto has gone through these moments before. Mt. Gox was just a few years ago, and I feel like, in a young market, these, kind of earthquakes of sorts pop up from time to time. That's just the nature of, a market building on itself. We also saw that with the tech bubble, quite frankly. We saw a concept that had promise, but a market and an industry that ran far away from itself. And once the Fed stepped in and raised rates to get some of the froth out, we saw that industry change quite a bit. So it goes back to crypto's technology being very compelling and having lots of adoption, but people really trying to figure out if the industry got ahead of itself there. And it's a hard question to answer because we don't fully understand what crypto's fundamentals are, where the center of gravity is. We understand that there's something there and there is value. We just don't get what that value is. And that back and forth could persist for some time.
Crypto is soaring today. We don't know how long that's going to last or what exactly is driving it. But one factor, CPI data, which showed a smaller than expected rise in costs. The correlation between Bitcoin and stocks has been such a big theme all year, and that correlation has been dropping. But then you did see the crypto prices spike, right as that CPI data was coming out. What happens now, and will economic factors like that continue to drive prices in crypto?
Yeah, well, we seem to forget so quickly that crypto in the end is another risky asset that investors can invest in. And, when investors, especially retail investors, think about crypto, they think about it as another drop in their risk buckets. So when they see reports like CPI come out, when they see Fed decisions come out, they think about what they should do to risk in their portfolio. So the way that crypto is reacting today, the way that stocks are reacting today, is just kind of a knee-jerk reaction of risk to the fact that we saw, a lot of really good evidence that the Fed might be able to take its foot off the brake soon. I mean, in the CPI report, yes, headline CPI slowed down, but we also saw, services inflation coming close to peaking. That's probably one of the closest details the Fed is watching. We saw rent prices slow down. We saw core CPI slow down. So we saw a lot of good evidence underneath the surface that the Fed's medicine is working here. And frankly, a lot of investors were super hedged up and they were super bearish. They weren't exactly prepared for a good report. They were bracing for a bad one. So now we're seeing the flip side of that. We're seeing a lot of unwinding, a lot of position changing in the face of that. And that's led to a crazy update for both stocks and crypto.
Okay, before we go, Crypto World's Jordan Smith also spoke to Reeve Collins, former CEO of Tether, about how the turmoil caused by FTX's collapse will shape both the industry and future regulation. Take a listen.
This is actually a secondary impact of that Terra Luna collapse. That Terra Luna collapse caused this. FTX bailed out Alameda, which is FTX's basically venture arm. And Alameda was heavily invested in Terra, and it really got impacted, and it would have gone insolvent when Terra Luna went down. I'm hoping this is the last domino to fall from Terra Luna. Now, the fact that FTX is going under might cause a few more dominoes and a few more negative things, especially it's greatly impacting Solana. There will absolutely be increased regulation. And this occurrence, what just took place, raises the likelihood of that significantly. And it's going to happen much sooner than we anticipated, because crypto regulation is a bipartisan issue. And even though they can't agree on much, they are, especially in light of the current events, they are going to do something.
That's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.